What's up, crypto crew? Welcome back to Bitcoin Bulletin, where we break down the market movers and shakers. First up, Ethereum is absolutely dominating the scene, showing incredible strength across multiple timeframes, while Bitcoin is playing it cool, holding its range steady. Altcoins like Dogecoin, Avalanche, NEAR, and Solana are absolutely crushing it, leaving the competition in the dust with double-digit gains this week. We're diving deep into what this momentum means for your portfolio. Next, we're talking about Bitcoin's next big move. We're seeing ETF inflows that are starting to look like all-time high behavior, signaling that the big players are back in the game. Could this be the precursor to another massive rally, pushing BTC towards $120,000? We've got the inside scoop on the market data and what it means for the crypto king. But hold on, because we've got a major warning sign flashing for Bitcoin, Dogecoin, and XRP. Our analyst Omkar Godbul is sounding the alarm on a potential bull trap emerging from the S&P 500's rising wedge pattern. With U.S. inflation numbers on the horizon, could Wall Street's sentiment drag down the entire crypto market? We're breaking down the charts and the economic indicators you need to watch. And finally, the corporate treasury trend is heating up. Cyprus-based Robin Energy just announced a significant $5 million Bitcoin allocation, joining the ranks of major companies diversifying their balance sheets with BTC. We'll tell you why Petros Panagiotidis and Robin Energy believe Bitcoin is integral to their long-term strategy. Stick around for all the details and make sure you're subscribed and have that notification bell on. Ethereum surges as altcoins lead the charge. This week, the crypto market was all about the altcoins, with Dogecoin, Avalanche, NEAR, and Solana posting impressive gains of 16%, 17%, 12%, and 10% respectively. While Bitcoin managed a respectable 3.3% gain and Ethereum added 3.1%, it was the smaller cap coins stealing the spotlight. However, in the last 24 hours, momentum has shifted slightly, with Bitcoin and Ethereum seeing modest gains, while Solana and Dogecoin paused after their significant runs. Bitcoin Cash and TRON showed resilience, holding firmer ground. The Momentum Alignment Score, which tracks a coin's performance across 7-day, 24-hour, and 1-hour timeframes, highlights Ethereum as the cleanest leader with a score of +3, showing strength across all periods. Bitcoin sits at +1, strong weekly but flat short-term. Solana and Dogecoin also show a +1 score, indicating a strong week followed by a pause and then fresh hourly gains. XRP, however, is showing a -1 score, up weekly but slipping short-term. Institutional interest is further illuminated by options data. For Bitcoin, the Maxi ETF shows a 55% put versus 45% call open interest for the September 19 expiry, suggesting institutions expect Bitcoin to remain range-bound between $27,000 and $35,000. For Ethereum, the Grayscale Ethereum Mini Trust shows a slightly more bullish 55% calls versus 45% puts, with strong call positioning near $30,000 and put protection around $42,000 and $50,000. This aligns with Ethereum's strong momentum score. Overall, while altcoins led the weekly gains, the current pulse suggests consolidation after a strong run. Ethereum remains the standout performer, bolstered by both momentum and options data, while Bitcoin's options suggest a tighter trading range. Can Ethereum continue its impressive streak? Will Bitcoin respect its trading range? And will altcoins like Solana and Dogecoin maintain their hourly momentum? Find out more on Investing Livecom. Don't go anywhere, because what's next could send shockwaves through the market. Get ready for a deep dive into Bitcoin's potential breakout and the surprising ETF inflows that mirror all-time high behavior. Bitcoin eyes breakout as ETF inflows mimic all-time highs. Bitcoin has been on a steady upward trajectory since the start of the month, demonstrating remarkable resilience after recent market turbulence. Currently trading above $114,000, BTC is showing strong signs of a potential breakout that could echo historical rallies. Market data and a significant return of Bitcoin ETF inflows are aligning to suggest a powerful surge is on the horizon. The bull and bear market durations indicator points to an emerging bullish setup for Bitcoin. This cycle has already seen BTC navigate 3 substantial bearish stretches, some lasting weeks or even months, putting investor conviction to the test. Historically, these downtrends have often paved the way for powerful recoveries, culminating in new all-time highs. If history is any guide, Bitcoin may be entering the nascent stages of another explosive price movement, with the consistent recovery trend since early September reflecting a growing confidence among investors. Past surges in ETF inflows have consistently coincided with Bitcoin breaching key resistance levels and advancing towards fresh all-time highs. The current conditions bear a striking resemblance to these historic moments. If these inflows continue at their current pace, BTC could replicate past trends, laying the groundwork for a significant new all-time high. The price is currently facing resistance at $115,000. Sustained buying pressure here is critical for the next leg up. A successful flip of $115,000 to support could propel BTC towards $117,261 and then target the psychologically important $120,000 mark. However, a failure to break out could lead to consolidation between $112,500 and $110,000, though this would still keep BTC within its broader uptrend. But is this rally set in stone, or is there a hidden danger lurking? We're uncovering a bull trap warning that could affect Bitcoin, Dogecoin, and XRP, all thanks to a pattern emerging on the S&P 500. Bull trap warning issued for Bitcoin, Dogecoin, XRP amidst S&P 500 signal. While major cryptocurrencies like Bitcoin are showing bullish signals, including a classic inverse head and shoulders breakout that could send BTC towards $120,000, a significant warning has emerged from the broader market. The daily chart for the S&P 500 E-mini futures is currently displaying a bearish rising wedge pattern. This technical formation suggests a potential sell-off in the stock market, which could, in turn, weigh heavily on cryptocurrencies and potentially trap optimistic traders. The S&P 500 E-mini futures have seen a steady, almost cautious ascent since August 1st, forming this rising wedge pattern characterized by converging trend lines. This pattern indicates that while prices are still rising, the underlying bullish momentum is waning, increasing the probability of a sharp downside move. Analysts and AI models like Google Gemini suggest that when such a pattern appears after an extended rally, it often signals that buyers are exhausted and the market is ripe for a major trend reversal rather than a mere pullback. Given that cryptocurrencies often move in correlation with Wall Street sentiment, a decline in the S&P 500 could directly impact Bitcoin and other digital assets. This risk is amplified if upcoming U.S. inflation data, specifically the Consumer Price Index, CPI, prints hotter than expected. Combined with recent labor market data, this could reignite fears of stagflation, a scenario detrimental to risk assets like stocks and crypto. The median forecast for August CPI is 2.9% year-over-year, potentially the highest since January, and above the Fed's target, with core CPI projected at 3.1%. Further supporting a cautious outlook, options data shows a negative bias for Bitcoin and Ether options out to December expiry, with puts trading at a premium to calls, indicating a demand for downside protection. While Bitcoin shows bullish technicals, XRP remains indecisive in a descending triangle, and Dogecoin, despite recent bullish moves, could be capped by a broader market downturn. Could the global markets be heading for a major correction, and what does that mean for your crypto investments? Stay tuned as we reveal a major company that's bucking the trend and making a significant commitment to Bitcoin. Robin Energy invests $5 million in Bitcoin, fueling corporate treasury trend. Cyprus-based international shipowning firm Robin Energy has officially announced the successful completion of its initial $5 million Bitcoin allocation, marking a significant step in its newly adopted treasury strategy. This move, executed through Anchorage Digital Bank N.A., positions Robin Energy as the latest corporation to leverage digital assets for portfolio diversification. The announcement sent ripples through the market, with Robin Energy's Nasdaq-listed stock, RBNE, spiking by an impressive 90% shortly after, reaching an intraday high of $4.27. Year-to-date, the stock has seen a remarkable 106.8% increase. Petros Panagiotides, CEO of Robin Energy, expressed his confidence in Bitcoin's unique characteristics as a scarce digital asset, stating, "We believe in Bitcoin's unique characteristics as a scarce digital asset and see it as an integral component of our long-term strategy to grow our company further and drive shareholder value." This strategic allocation by Robin Energy aligns with a growing trend among publicly listed companies to add Bitcoin and Ethereum to their balance sheets. Notable examples include Taiwanese investment firm Soar Ventures, which unveiled a $1 billion Bitcoin treasury fund, and Japanese firm Metaplanet's plans to invest up to $835 million in Bitcoin. The total amount of Bitcoin held by publicly listed companies has now surpassed 1 million BTC, with MicroStrategy leading the pack. While Bitcoin adoption is undeniable, Ethereum is also experiencing unprecedented growth, with asset manager Van Eck dubbing it the Wall Street token due to its extensive use cases. Notably, in August 2024, Ethereum ETFs saw $4 billion in net inflows, while Bitcoin ETFs experienced outflows of $628 million. At press time, Bitcoin was trading around $113,930, up 2.7% in the past 24 hours. That's all the top stories for today, but we're not done yet. Get ready for a lightning round recap of all the biggest news and a full call to action to keep you locked in. And that's a wrap on today's Bitcoin Bulletin. We saw Ethereum leading the charge while altcoins like Dogecoin and Solana posted massive weekly gains. Bitcoin ETFs are showing all-time high behavior, hinting at a potential breakout past $120,000. But beware, a rising wedge on the S&P 500 could spell a bull trap for crypto, and Robin Energy is doubling down with a $5 million Bitcoin investment. Don't miss out on any of the action. Smash that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto insights, and hit that notification bell so you never miss an update. Follow us on all social media platforms to stay connected. We'll see you in the next one.